Hey folks, Rachana Ranade here and I welcome you all to a very interesting video which is about Tata Motors DVR. So what are we going to discuss in today's video? Whatever you need to know about Tata Motors DVR, about especially what will be the implication about tax, will there be any arbitrage opportunity which may exist? We are also going to discuss about how the DVRs getting converted into ordinary shares, will that impact the EPS of Tata Motors share or not? So many things we are going to understand in this video, so keep on watching the video till the end. One more very important point is that this is a shoot and release video, so everyone knows, just in case if I fumble upon something, then whatever correction is to be done, I'll do that in the pinned comment, so don't forget to watch that, okay? Now, first and foremost, we have to understand that what is this Tata Motors DVR and why was this DVR even issued? So, this dates back to 2008 when Tata Motors desperately needed money. So, what had happened was that they had acquired Jaguar Land Rover, JLR, and for that they had funded this acquisition with borrowed money. Now, they wanted to get rid of this borrowed money, and for that what they did was they issued DVRs and they raised almost 4,000 crore rupees and they decided to repay the loan. Now, question was, why did they issue DVRs and not the normal shares? Reason was very simple. They didn't want to dilute their ownership. And that was the reason why they came up with something in the issue which they mentioned is this would be a differential voting right. Now, what is the meaning of differential voting rights? So, if you held like 10 DVR shares, you would be eligible only to one vote. Ideally, it's one share, one vote, right? But in DVRs, it was like 10 shares, you will get one vote. Number one. But then how would people be happy buying these DVRs? So, for that they said that we will give you additional dividend if you are holding DVRs. And that was the reason why many people thought that it would be really attractive, but if they were to issue it at a discount, then it will be much more attractive. And that was the reason why when Tata Motors was trading around 340, the DVRs were made available at just 305 rupees. But in spite of all these points, what happened was DVRs still traded at a discount for a long number of years, almost 8+ years. And there could have been multiple reasons why this discount never withered away within a short span of time. Number one reason could be that all the big players, be it big investors, big mutual fund houses, they would have preferred buying normal shares in comparison with DVR. Why? Because they want voting rights. So, I'll just give you a quick parallel. In case of Nestle, this happened recently, less than a year ago, that Nestle wanted to pay a higher royalty to its parent company, Nestle SA. And of course, for that, if you want to pay a higher royalty, you have to have a shareholders approval. And shareholders said, no, this is too much royalty increase that you are asking for. So, revert it. We will not allow such a high royalty payment. And that was reverted. Okay, it was reduced. So, now you can understand the power that is there in the shareholders' hands, and that is the reason why big mutual funds or big investors, they would generally prefer a normal share as compared to a DVR, right? So, big players stayed away. Retail individual investors like, we don't really understand what is this, so better we stay away from this. So, even less number of retailers bought into DVR as compared to Tata Motors. And that was the reason why, as I mentioned, why this discount remained between Tata Motors and Tata Motors DVR for a long time, and it still remains, by the way, as I shoot the video, right? Now, why are we discussing about Tata Motors? So, DVR concept is clear, I'm sure. Now, first we have to understand that why are we even discussing about this? Because it was announced on the 1st of September that there is going to be a swap between Tata Motors shares, normal shares, ordinary shares, and between Tata Motors DVR. Now, what was the exchange scheme? It was mentioned that if you are holding 10 DVRs, you will receive 7 ordinary shares. So, you will have to give 10 DVRs and in return, you will receive 7 ordinary shares of Tata Motors. Now, for that, we have to also understand what are the multiple implications which are involved. So, for that, I am going to share my screen so that it will be simpler for you to understand. First things first, their CFO, PB Balaji, he mentioned that DVR cancellation. Why DVR cancellation? Of course, 10 DVRs will be taken back by the company, they will be cancelled, and against those 10, 7 new normal ordinary equity shares of Tata Motors will be issued. So, what the CFO is saying that if DVRs are cancelled, it may increase ordinary shares liquidity in the market by 18%. Now, why he may be saying that? So, you can imagine just a simplest explanation of this. Assume that out of 100 shares that are traded for Tata Motors, let us say 18 shares of DVRs are traded, okay, and roughly 82 shares of normal Tata Motors are traded. Now, what will happen? These 18 shares are anyways gone now. So now that is going to increase the liquidity in Tata Motors. So this is a very base explanation, not going into the math in absolute detail, but I hope you have understood that if DVRs are cancelled, how it will increase the liquidity of normal Tata Motors shares. Okay. Now second thing he has mentioned is that once the capital restructuring is completed, Tata Motors equity capital will be reduced by approximately 4%, which will in turn increase their EPS. Now, how can the EPS increase if the DVRs are cancelled? And for that, we have taken a very simple example. Okay, let's take this example. Assume that the company has made a profit of 100 rupees. Company has 10 DVRs and 10 regular shares. So, how will the EPS be calculated? This 10 plus 10 will be the denominator, which is 20 is the denominator, and numerator is 100. So, EPS will be 5. As simple as this, right? Now, if these 10 DVRs, so we said 10 will be normal shares and 10 will be DVRs. Now, these 10 DVRs are going to vanish. So, how much shares are remaining? Only 10 regular shares. But wait, against these 10 DVRs, 7 will be issued. So, 10 normal plus 7 freshly issued will make it to 17. Okay. So, now 100 rupees will be divided by 17. 100 was the earning. Number of shares will now be 17, and that is why the EPS will look improved at 5.90. So, you can imagine earlier instead of 5 EPS, now it will come to 5.9 EPS, will be definitely looking optically better. Now, this is understood. EPS would ideally increase, assuming that the numerator is kept constant. It has to increase, right? Now, what about the tax implications? Now, as I mentioned, tax implications are only and only for Tata Motors DVR shareholders, not for Tata Motors normal shareholders. Now, what will happen for Tata Motors DVR shareholders? And for that, what we have done is we have just come up with this simple calculation. What we have considered is that assume that a person holds 10 DVR shares. Okay. Now, for 10 DVR shares, he is going to get how much? He or she is going to get 7 Tata Motors shares. And as I shoot the video today itself on 20th, today the closing was 1086 for Tata Motors. So, 1086 multiplied by 7 comes to 7602. This is what a person will get. Okay. Now, we have assumed that the cost of acquisition of 10 DVR shares was 3000 rupees. Okay. This is just an assumption. In this case, you had bought shares worth 3000, the DVR shares, you had bought shares worth 3000, and for that you are going to get shares worth rupees 7602 in consideration, and that is the reason why this will lead to a gain, capital gain of 4602. Okay. Now, this will be subject either to a short term capital gain or a long term capital gain. Of course, you will have to do this consideration on the date of swap. Okay, not today. Today is 20th. This is not going to be the calculation that you are going to do on the 20th. You will have to do when you are going to, when the swap will happen, when the actual shares will be going out of your demat account and when the new shares will be coming into your account. Okay. Plus, again, let me again clarify, I am not a taxation expert. I have ideally to get into finer aspects of taxation, it will be better if you consult your chartered accountant as well, right? Now, going on to one more assumption, there is something known as a deemed dividend as well. Now, if that be so, I have kept the main price same, 7602. Now, assume that out of this 7602, deemed dividend is assumed at 25. Okay. See, I am not going to tell you what is deemed dividend, this, that, otherwise I will get a feeling that I have started teaching CA final taxation. Okay. So, there is something known as deemed dividend and assume that is at 25 rupees. How will you understand how much is the deemed dividend? Of course, Tata Motors will send you an email wherein they will mention that for whatever number of shares you hold, this is the deemed amount of dividend. So, what will now be balance 7602 minus deemed dividend, this will be 7577. Again, cost of acquisition we have assumed as 3000, same thing. In this case, your capital gain will be 4577 instead of 4602, which will be taxed either as a short term or as a long term. Deemed dividend will be taxed separately. Okay. So, I hope you have understood about the tax implications as well. Now, big question is that can you make profits from this now? So, if you are one of my pro investor members, I had discussed this video as a stock of the month for January 2024. This was almost 7 months ago, and in that also I had explained this concept of 10 DVRs being swapped 10 DVRs being swapped with ordinary shares, 10:7 ratio, and at that point in time I had told that the arbitrage gain would come around 4.10 rupees, 4.10%, sorry. And now if I were to do this arbitrage gain calculation today, Now this remains at around 1.64%. Okay, so whenever you have knowledge, you have edge over others. Knowledge mein edge bhi aata hai, okay, edge with knowledge. Okay, so if you again want to learn all these new concepts, you can definitely consider joining our memberships. How do you do that? You have to just press the join button and you will be getting access to all the Pro Investor membership videos that I've done till date. Alright, so what did we learn in today's video? We learned a lot of things. We started with what is this concept of DVR. We understood that why DVRs were even issued. Then we understood that even if I keep the numerator constant, ideally EPS should be now increased for Tata Motors because there's going to be a reduction in the capital, right? We also understood what will be the tax implication, and we also understood what could be the arbitrage opportunity which could be still possible. So I hope you have understood all these concepts. If you did like the video, please consider smashing the like button. Do share this video with your friends. If you have any doubts about this, please leave your doubts in the comment section below. If you want me to do a specific video on any specific share, then also mention the name of that share or that stock in the comment section. We'll read through this, and whenever time permits, we'll make a separate video on that as well. I hope you found some value in today's video. Till then, take care. Jai Hind and bye-bye.